It is now time for Ask the Expert. There have been lots of surrounding questions about the Republican tax reform plan and how it would impact our retirement savings.
So joining us live this afternoon, UWM finance professor Dick Marcus. Thank you very much for joining us. So let's give some people some basic understanding here. There are two types of individual retirement accounts, IRAs. There's the traditional IRA. What is that? What does that mean?
By putting money into the IRA, you get an immediate tax exemption. So the benefit is right then, encourages you to save for retirement.
Which is like your 401k. You can do that.
Exactly.
All right.
What that
the
is.
other one is the Roth IRA. And that one is different because you're taxed as you take the money out.
Right. You don't get a benefit at the time you enter it, but you don't have any taxes on the interest or capital gains during the time you're accumulating, but you do when you start taking it out.
So let's talk about the debate that we're having, because even when you talk about Roth IRAs and IRAs, 401ks, what are people concerned about? Because as of today, the president made it very clear that these IRAs, these 401ks would not be touched.
There was a possibility to find a way to raise taxes by not allowing 401k deductions to occur. These are pretty substantial. If you are a single person making $38,000 or more, you're at the 25% tax rate. And so if you put $18,000 away, the government is not taking $4,500 away from you in taxes. So it's a benefit to you. It's a substantial benefit.
It is a benefit to everybody, whether you're in the middle class or the upper class here. Professor Marcus, give us a sense as to how important of an incentive this has been for people to save money.
Well, for the last 30 years, we've had the 401k, and it's expanded. More people are participating. Employers are matching, so there's two inducements to contribute. First, that you're having a tax deduction, and second, if they're giving you essentially what some people call free money to retire, accumulate. And it's hard to accumulate money for retirement, so giving an inducement has been successful and helpful to many.
Quickly, you mentioned something that was interesting. You were talking about the cap, and that was another argument. People were talking about how much I can actually give to this account, and it's a drastic drop. I mean, we're talking going from maybe $18,000 to $2,400.
Well,
that was what they were talking about.
The IRA is $18,000 maximum up to age 50, and when it goes up to $24,000, maybe that's what you're thinking of.
No, so what they were saying is that
they want to cap it to go even lower at that, to almost $2,400.
They were going to give you a tax break on the first $2,400 instead of the $18,000 or the $24,000. So I appreciate your time.
There is a lot to go. There's a lot more.
Yes, Professor Marcus, thank you. All right, got a question for our experts. Email them at asktheexpert@today'stmj4.com. You can also leave a voicemail. We do have that number right there for you. All right.